GM everybody, it's Blake here. As always, none of this is financial advice. Trade and invest at your own risk. This video is designed to help get you prepared for this week's trading. Let's get started. We have the S&P SPY pulled up here on a monthly time frame. And yeah, you guys, if you watched last week's video, you'll remember that I had mentioned this pivotal month's low, the June low. We talked about it all for the past 2 weeks, really. Finally came and tested and broke below that. And I said, yeah, if we break below, likely we come and test the bottom of this cloud, which is roughly around 350 on SPY. So on the monthly time frame, we are in a confirmed downtrend and really getting close to testing that 50-month moving average. Now, to zoom in on a little quicker time frame, the weekly, yeah, this does not look great. Price weakness confirmation. Closing near the lows on Friday does not... it's not bullish price structure, okay? So we've been bearish for the majority of this year, but I think it's important to talk about where we have to shift gears and, not be so bearish anymore. So again, on the daily time frame, over a 13-day downtrend, we talked about this bull flag near the June lows, and then finally on Friday, close below and at the lows to end the quarter. So we are at extremely oversold levels on the NYMO. So it wouldn't surprise me if we did come and do some sort of bounce. But you guys know we trade price structures. So long as we are in a downtrend, the odds are favoring lower prices. So can't really get long until we have a close inside of this cloud and no trend. And once we enter an uptrend, that's when we can start allocating new risk exposure. But until then, it's very simple. There's not a lot to do, and the priority is going to be protecting capital because it's very difficult to short down here after a prolonged downtrend. Very good place to trap bears and get them to short, get them to cover their shorts. But at the same token, can't really get long either because we don't have odds in our favor, and we're still trending lower on all major time frames. And we have time frame alignment on the monthly, weekly, and daily time frames. And so this macro trend is lower. So if we do get any sort of rallies, I'm going to be expecting those rallies get sold and we eventually make new lows. So for me, I think, we could potentially see a rally, into the middle of this month. Potentially, I'm not predicting price structure, but logically it would make sense to get some sort of relief of this downward price movement just to roll back over and make new lows again. So I talked about where we would need to shift gears instead of being so bearish. So obviously you see I have this 411.73 highlighted. That was a previous pivotal high prior to some CPI data that we received. So I think if we can get above here, that would at least get me a little more, at least neutral on a macro trend. I know we're above the cloud, so we would be an uptrend, but I'm talking bear market, bull market scenarios. If we get above this 412, I think we would have a higher probability of exiting this bear market. So above this 412, I'm a little more bullish to neutral. I wouldn't be so bearish anymore. And if we can get above this pivot high, this 431, 432 on SPY, I think we could absolutely be 100% long market exposure and talking about the end of the bear market just based on price structure. Now, that level also would be above the 200-day moving average. So above this 432, we'd be back above all major moving averages, like I talk about the 10, the 50, the 200. That'd be very significant, and we'd be back above a pivotal swing high level. So it would be breaking market structure to the upside. So above 431, 432, bear market's over. Time to be extremely bullish and potentially leverage long for the long term. And then above this 411, 412 area, we would still have this 200-day to combat with, which is why I'd still be, still somewhat neutral, but leaning bullish to the upside. Above that, obviously, we'd be feeling a lot better about the price structure. So above this 412, a little more neutral, and then above this pivots candle, which was some inflation data. So above this 390 area on SPY, I think you could potentially take that for a trade up to this 50-day. So those are my levels where I feel confident in the allocation to our investment portfolio, and also how the market could potentially react at these levels if we get there. So above 389, potentially a trade long. Above this cloud, obviously we're going to be feeling better. Above this 412, a little more neutral to bullish, and then obviously above the 200, a little more bullish, and then above this 432, this pivot high, all bets are off on the short side. Bear market's over. Let's rally and make some new highs. So we always see, people coming on CNBC talking about, keep buying the dip, and eventually they're going to be right because eventually this market will turn. We've been bearish for the majority of this year since we broke trend back here, broke below this 200-day. We knew things weren't going to be smooth sailing. Now, we can continue to be bearish for as long as price tells us that we need to be. But if we start breaking to the upside of some of these levels, we need to readjust our macro thesis on the market. So I think it's important to not only talk about, where we need to be defensive on the downside, but also where we need to get aggressive on the long side coming out of this bear market. So some levels to highlight, and definitely something to keep an eye on. I want to talk a little bit about crypto. You guys know that I am a big advocate for blockchain technology. Nothing too much has changed. I mean, this Bitcoin has been just kind of dribbling sideways below major moving averages, below the cloud, below the 200. We're still in a bear market. This can absolutely move lower, but I think, like I've been saying, if your time frame is anything over 3 years, I think we're going to be looking back and wishing that we were buying sub 20,000. Now, if we can get above this 25,000 level, which is going to be not an easy task, especially given the current environment. But if we can get above this 25,000 level, that would get me to start changing my tune as well with crypto, that, hey, the bear market potentially could be over, and we need to be, potentially allocating more into Bitcoin and Ethereum if we can get back above these levels, because this is definitely an asset class that can rip much higher when it gets some momentum. Ethereum, similar story, relatively weaker as of late to Bitcoin. So past couple weeks, we've talked about what I prefer at the moment, Ethereum or Bitcoin. Currently, it is Bitcoin because it's relatively stronger than ETH. So just to wrap up, I do want to talk a little bit about tech. So, QQQ, we don't want to see the big names like Apple and Tesla and those, mammoths start to roll over. And yeah, the price structure on those, mega cap names does not look great. Looks very similar to the NASDAQ. So be careful this week. Also be careful the rest of this year. We're in this prolonged downtrend. We have time frame alignment on monthly, weekly, daily time frames. We have extremely poor market structure and closing on price weakness confirmation to end the quarter on Friday. So, it's I hate to sound, perma bear and, the sky is falling, but it's important to recognize that, these markets can go lower and we need to be prepared for lower prices. And at the same token, we also need to know where we're wrong in being bearish and when we need to change our tune and start, getting a little more bullish and allocating capital to the long side. So this week, guys, it's going to be another boring week. I'm not going to sugarcoat it. it's an ugly market, and anybody who's trying to trade this market is gambling. It's a big risk. So be patient, have patience. We're going to have more opportunities. Just because, I sound extremely, bearish on this video does not mean that there won't be opportunities in this market. There absolutely will be, but there will be opportunities that are rewarded to people that are the most patient and have the most discipline to execute a trade plan. So heading into next week, I'm going to be, really just waiting to see if and when we can close back inside this cloud. If we do, I'm going to do the same thing I do every time, and that's get long in uptrends, even in bear markets, because those rips to the upside can be quite explosive. So have patience this week, and I'll see you on the open.